Good morning, friends. So, today there is a lot of buzz around PSUs in the financial markets, and we just thought that we would kind of form a perspective around it and have a discussion with our in house expert and research head, Dr. Joseph. Good morning, Dr. Joseph.
Good morning, Vivek. Thank you very much. It's always nice to have a chat with you on current events.
Yes. So, Dr. Joseph, as you see in the financial markets today, we see that PSUs, public sector units, are. I think there is a lot of buzz around it, primarily because they have moved up, and what is the way forward? So, I just want to kind of put across some questions that you can answer, and we can kind of have a maybe a perspective on the same.
Yeah,
So
definitely.
what do we today? How PSUs are today? How are PSUs different from what they were in the past, say, a decade or 5 years?
Yeah. Vivek, the entire perception has changed as of today. As of last couple of years, the perception has changed of the markets, which is why we are seeing the price action, because there is a very good price performance from the PSUs. And this price performance is on account of the fact that there is a change in the perception. And this change in the perception has resulted from three objective factors. The first factor is that earlier people used to think that the PSUs were not very professionally managed, quite often managed by designated government officials, and now now people believe that they are more professionally managed. A second factor which has changed the entire landscape is the fact that they have a better commercial orientation today. All the public sector enterprises, they work to make profits because those entities belong to the whole nation and to its people. So there is a commercial orientation apart from this professional management. A third factor which has helped public sector enterprises is that we have a strong investment cycle at this point of time, and that's caused by the public capital expenditure which the government of India has been expending. Last year it was 10 lakh crores. In the current financial year it's going to be 11.1 lakh crores. So 10 lakh crores to 11.10 lakh crores is a 10% jump. So the accent on this public capital expenditure is still there, and it can only grow, and it's not going to go down. It has benefited a lot of PSUs, especially if you take HAL. It has benefited immensely from the government orders and the public capital expenditure. So the rediscovery of greater professionalism, the commercial orientation, and the public capex, which is quite large, are the factors which have created conducive environment for the PSUs.
So another question I had, Doc, is that change in political landscape, does that have a bearing on the performance of PSUs going forward?
No, I don't think so, because the political terrain or the political landscape will have not much of an impact, or virtually no impact on the performance of these companies. Mainly because, as I mentioned earlier, there is an excellent price performance which is reflected in the prices of these stocks on the stock exchange. The perception has changed, and there is a momentum which is based on fundamentals which has gripped the market. So this momentum is based on, or the price performance is based on fundamentals, stock fundamentals, which was earlier not discovered completely. And this momentum cannot be destroyed at this point of time by any factor. Therefore, these entities will continue to perform very well, irrespective of changes in the political landscape. I would like to mention here that when we had the exit poll results and then the actual results, we had seen the PSU pack also going down along with the markets. The prices went down, and as the markets picked up, even PSU prices picked up. And if you look at the net losses which some of these stocks incurred, it was very much like the losses that we had seen in mid caps or small caps. So there was nothing too much differentiating as far as the fall was concerned and the recovery was concerned. So they're very much part of the markets, and the political climate or the terrain may not have much of an impact from here on, because the momentum is supported by fundamentals.
So now speaking of fundamentals, one of the parameters that is very important in the financial markets to evaluate is the valuations. So on the valuations part, what is your perspective on that?
Coming to relative valuations, they are dead cheap. If you look at the 12 months trailing PE on Sensex, it's at around 23, and on the PSU index it is at 13. So on a relative valuation basis based on PE, they are looking much cheaper to buy. That is one factor that we need to take cognizance of at this point of time, the valuations. And as the rediscovery of the real or the intrinsic worth of these entities continue to be there in the markets, that rediscovery continues to be there in the markets, you will see the valuations becoming more and more expensive. It only means that there is still a lot of room for market cap expansion and also PE expansion at this point of time, because of the rediscovery of the intrinsic value as time passes by and because of the conducive environment. If you're looking at the returns, because that's another perspective and it's the other side of the valuations also, the PSU pack in the last 1 year gave returns close to 100%, and it was the index performance as well, the PSU index. If you are looking at the YTD performance of PSUs, it is at around 43%. YTD performance of PSUs is 43%, whereas the Nifty performance is at around 10.5%. That's the YTD performance. So there is a gulf of difference between the YTD performance of the PSU pack as against the large caps or the Nifty or the Sensex. And it is, as we know, for the last 1 year also, this difference is retained with the PSUs at 100% and the Nifty and the Sensex at around 22.5%, 23% 1 year returns. So whether you are looking at the valuations or the returns it has generated, it is displaying immense amount of value and also a momentum and a potential for performance.
So do you suggest an individual stock approach, or do you suggest through funds? How does an investor participate?
Yeah, as far as the PSU funds go, PSU equity funds from the mutual fund space goes, there are 3 sectors into which the substantial exposure is at this point of time of the portfolios. One is banks and financial institutions, second is oil, and the third is energy. As far as banks and banks go, as the valuations in comparison to private sector banks are extremely attractive. It's almost the same as the Nifty valuations against the PSU equity valuation. So definitely in terms of valuations, they are very attractive, the banks. Same is the case with the oil sector and also energy sector. Banks and financial institutions, with the likelihood of interest rates gradually moving down, and the PSU banks having one of the largest network of branches across the country, even in remote parts, and also the reform efforts which have been going on in the last few years, including writing off all bad loans and NPAs, and then making a fresh foot towards new business and reorienting everything. Banks are going to do very well and they make immense value. We have banks like the State Bank of India in that pack, which is yet to discover the market is yet to discover the real worth of it, because it's a large conglomerate. Then we have oil sector, which will do very well, and third we have the energy sector, energy companies. Energy companies, as you know, the deficit in our energy requirements is around 40 to 50%. So there will be there will be much better performance in terms of earnings and therefore better performance in terms of price when it comes to energy companies. And we are in fact seeing some good momentum in energy companies. Banks will gradually come up and pick up. Therefore, we need to have a more diversified exposure to the PSU segment. And this diversified exposure over the multiple sectors, that's banking, energy and oil companies, that diversified exposure with a portfolio of 40-45 companies is given by PSU equity funds. It will be a better idea to look at a pack of companies which have exposure to these three sectors. Even from a risk mitigation perspective, it's better to look at a PSU equity fund at this point of time for investments. That's one part of it. Second is that there are many advantages of investing into the equity funds. We have, if you look at the PSU equity funds and the breakup of the market cap allocation, all funds except one small fund, all of them have again a diversified market cap allocation. Almost all of them have 70% in large caps, and it is a safe portfolio of blue chips, and then the rest would be mid caps. So the portfolio positioning in terms of 70% large cap equity and the balance 20 or 30% into mid cap equity, and one or two funds have very small exposure to the small caps. Therefore, in terms of market cap allocation, they are very well positioned with most of the portfolio allocated to large caps. So you have a sectoral diversification which is available to you through multiple stocks, maybe 40, 45 or 50 stocks. You have an appropriate market cap allocation with a higher positioning into large caps and then mid caps. And number three, all these PSU equity funds have an excellent track record of performance. If you're looking at it in the last couple of years, how they have performed. As I told you earlier, the gulf of difference between the Nifty returns or the Sensex returns to the PSU pack returns is quite substantial, which is something that makes those portfolios irresistibly good for investors to invest into.
So diversification and alignment with the economy, I think funds are better than stocks.
Yes, yes.
Important. And at the current levels, Doc, I mean, today markets are at lifetime highs. So from that perspective, how do you kind of, if the correction happens at these levels, then what happens to the PSU funds?
Yeah, see, at this point of time, we can say with a very high level of certainty that the market is in a secular uptrend with the likelihood of interest rates going down. Market yields have already started moving down, like we have seen in gilts. The yields have moved down quite substantially. Then we have the strong investment cycle. Then we have the public capex, which I mentioned earlier also, which is huge. We have political stability, and we have a rate of GDP growth which is close to 7%. We are structurally tuned to grow at 7%, come what may. Otherwise, we should do something deliberately to pull down the rate of economic growth, which we or our policymakers will never do. So the economy is going to grow. Interest rate scenario is going to be one of lower interest rates, and we have a strong investment cycle. And even from the budget. There is an expectation that the government could do something to promote rural consumption, which is a very good thing. And the entire allocation to agricultural and allied segments in the budget, in the interim budget, was around, if I remember correctly, around 1.5 or 1.6%. So it is expected that the allocations could be slightly higher this time around, and Also, the small and marginal farmers also could get some benefits. These are certain things which are street expectations from the budget. These are also positive for the economy overall, and this will basically support the equity markets. But we cannot rule out corrective downward movements. Maybe 7%, 8%, or even 10% downward movements is quite natural to markets. And even if such downward movements happen, it should be made use of as opportunities to increase the commitment of funds into the markets. Coming to the PSU pack, what I would like to state very clearly is that even those stocks would move down in line with the market correction, and they would also move up in line with that. So therefore, an expectation that if market moves down or if there is a correction, there will be too much of a correction in the PSU segment, I think it is not substantiated or supported by fundamental factors or economic logic. Therefore, if broader markets correct a little bit, even these stocks would correct in line with that, and we had seen it during the exit polls and the actual election results and all that, and the market picked up, they also picked up. So we should not take these funds and these stocks out of context. We should treat them as part of the broader markets where they are also positioned to deliver very good price performance. And as I told you, they are much cheaper to buy compared to the entire market or even the large cap index.
So, just in continuation with the budget, just wanted to know your perspective. Can government look at disinvestment?
There could be disinvestment proposals coming up. That is a potential or a probability. That is also good for the markets. That also reveals a greater professionalism, because there could be some enterprises in the public sector which probably could be managed better or by professionals, by business people. Second, government could look at other things meantime. Therefore, it's possible that there could be some disinvestments as well, which is welcome.
Which is a positive for them.
Which is a positive, because we should have even the current government's principle or motto is that less of government and more of governance. So to the extent government need not get weighed into the PSU segment, they could gradually disinvestment and get out of something which may not be very relevant to the government from a social perspective also. That's my view on that.
So thanks a lot, Doc. I think this clearly kind of gives us a picture that, going ahead, PSUs will do well, and we should look at it from an investment perspective. From the 3 to 5 year perspective,
yes,
there are a good opportunity for investors, and the valuations are pretty much reasonable. And there could be diversification and alignment with the economy. So thanks a lot for your deep insights.
Thanks, Vivek. Thank you very much.